We've got another fresh business problem for Rocketblock's experts to solve in today's mock interview. Today's case will test the candidate in a couple of different areas as they explore a tricky growth, profitability, and market entry question. As a reminder, if you want to improve your skills, you need to be practicing actively and deliberately. At the start of this case, see if you can pause the video and come up with your own structure or framework to attack the problem. If you want, you can put your structure in the comments and we'll leave some feedback on it below. As a bonus, this case features a pretty challenging market sizing that you're welcome to try on your own as well. Good luck and have fun casing.
Our client today is SEA Group, a New York Stock Exchange listed, Southeast Asia based e-commerce giant with a market cap of 75 billion. It has become one of the largest tech players in the region after explosive growth in the e-commerce demand from the growing population and disposable income of Southeast Asia, especially during COVID. However, as tailwinds have moderated, SEA Group is facing challenges in maintaining their same pace of revenue growth, and their path to profitability remains inconsistent and questionable. For this case, you, Maddie, have two tasks should you choose to accept them. You should definitely accept them, by the way. You're not going to get the job if you don't accept them.
Okay.
One, diagnose the key drivers behind the challenges, and two, propose solutions on how SEA Group can better position itself for financial sustainability in the mid to long term. Any questions?
No. Let me recap what I heard here. So SEA Group, I'm not familiar with them, but market cap of 75 billion. They are a pretty significant player here in e-commerce in Southeast Asia. Seems like they've grown pretty quickly during that time, and now we're sort of flattened out and trying to figure out what's next. There's two things that I'm trying to figure out here. Number one is diagnosing the problem that's kind of slowing the growth, and number two, figuring out how they can get onto a path of financial stability for the future. Did I get all that?
Yeah.
Okay, cool. A few questions here. First, in terms of diagnosing the problem and then demonstrating financial stability, is there a revenue target, a profitability target? I'm guessing it's going to be probably more on the profitability side, given e-commerce and tech companies are great at revenue growth, profitability not always.
Sure. Yeah. I mean, so current revenue is at $13 billion. They would like to see continued growth in that revenue number. But to your point, what they want to see is sustained progress towards improved margin that allows them to show a clear path to profitability and kind of assuage many investors' fears that we're just kind of, pouring money into a company that doesn't make any money.
Okay. That's helpful. When we say two things, we say Southeast Asia, that is pretty broad swath of the world. Do you have any, more information about which countries? Because one of the things I could be considering is expansion into other markets. So I'd like to understand where we operate today.
Yeah, so the major Southeast Asia markets, so Indonesia, Vietnam, Thailand, Malaysia, the Philippines, Singapore, and Taiwan. We're less interested in the Cambodias and Laoses of the world.
For now.
Yeah, that's right.
For now. Okay. That's helpful. That's a really big swath of the world, and really different countries. And then in terms of e-commerce, can you tell me a little bit more about what SEA Group does, and kind of who their main competition is?
Sure. So they effectively operate a marketplace. Right. So, you can think of this as Amazon's kind of like third party basis, right? Where they effectively are matching buyers and sellers. They do a lot of stuff to support around logistics, around payment, around verifying who the sellers are. They make it a place that you want to come and shop. But they are not the direct manufacturer or oftentimes the direct seller of the thing, right? So they're oftentimes not taking on inventory. So as such, the primary players are kind of the, Amazon equivalents in Southeast Asia that are prevalent. So that is, an Alibaba company called Lazada, TikTok Shop, and then other local platforms that are kind of operating in these individual countries.
Okay. All right. Well, This is a really interesting prompt. Do you mind giving me just a minute or so to kind of organize my thoughts?
Mhm.
Okay. So this is a sort of a two-part framework, and then there's going to be different buckets within those two parts. So I'll walk you through um, the two high-level ones, and then we'll go into it. So the first is going to be the diagnosis phase of this case. We need to figure out what is causing um, the financial challenges that the C group is facing. So I have four buckets here. We have customer, competition, operations, and regulatory. I likely think, I ordered that in kind of the order in which I think, is going to be driving these challenges. And so customer, competition, operations, regulatory, in that order is the order that I'd want to explore. The second phase of this is going to be, all right, well, we've diagnosed it. So what's the solution? So laying out potential solutions in terms of, getting to a better place financially and uh, more profitable, more sustainable. And that has sort of two main buckets, and that'll be revenue growth and cost optimization. Pretty simple. Let's look at the revenues. Let's look at the costs. One of these is going to be driving it, but it'll really depend on what we diagnose as the problem. So jumping back into the diagnosis phase, in terms of customer, that's our first bucket there. It could be weakening, consumer sentiment. We know that in COVID times, everyone was forced to be at home. They were forced to buy things online. But we have had, some global issues in terms of trade and tariffs. And so it might be more expensive. And so there's less discretionary income. We might have also just had a shift in consumer preferences. People were forced to buy online. Now people are saying, hey, we want to be more in person. That could be part of this. Um, with tech companies, it's oftentimes you're able to get the first adopters early and cheaply. And now it's getting more and more expensive for or customer acquisition costs. And so that could be part of the problem there. Moving on to competition, it could just be that there's intensifying and increasing competition. This Alibaba company, TikTok shop, saw the rise of the C group and said, hey, we want to jump into that market. And maybe it's a sort of a three-horse race and there's more competition. In terms of ops, we've seen rising logistics and fulfillment costs all over the world. Shipments get delayed, there's new tariffs, there's a lot of lack of surety and kind of like knowledge of what tomorrow is even going to look like. And so that's not a great business operation, business environment to operate in. And then finally, regulatory. A lot of things popped up during COVID times that were sort of in a legal gray area, and oftentimes the regulations catch up. And so there could be some sort of changing policies that putting the C group at risk.
So before we move on to your next, when you say ops, right? So that third bucket, can you help me understand kind of like what you mean by ops? Because I feel like company operations kind of means different things to people in different seats.
Totally. So when you describe the C group as a marketplace, they're going to be sourcing goods from all over the world, and they're operating in many different countries. And so if we look at just the last 3 months of news in the U.S., there's been 20% tariffs, 120% tariffs, and we've had all of these things. And so in my line of work, I've had customers who have ships sitting outside of port because they're waiting for a tariff to be finalized before they want to bring a ship into port and pay that tariff. They're sort of hedging, and that increases costs because you're paying for a crew longer, and there's just like this risk that no business wants, and no customer wants to say, hey, this might be $1 today or $2 tomorrow. It makes it really hard to kind of predict the future. Does that answer your question?
Yeah, it does.
Okay. And then moving on to solutions, I said the two buckets are going to be revenue growth and cost optimization. So in terms of revenue growth, there's always new markets to look at. Laos and Cambodia in Southeast Asia aren't exactly massive, markets, but we should explore new markets, whether we're looking into India and Pakistan, whether we're looking into more of kind of East Asia, and China and Japan. We could look at other value-added services to the merchants who are on our platform. Another one would be strategic partnerships. We could look at loyalty programs, things that sort of, your Costco model, your Amazon Prime model. We've also had like the cost optimization side. So we could look at moderating kind of our merchants and the user incentives and subsidies. As I said, the customer acquisition costs, we're probably offering, 50% discounts or things on your first order. We might have to kind of pull back on those. We could look at our overhead, for operating in a lot of different markets. Maybe we're looking to centralize our offices, but that could be a challenge. And then we want to look at kind of more effective setup of our logistics and fulfillment, because again, we're going to be shipping things all over. And so maybe we slow down our shipping times, but we're bundling orders. And so we're able to bring our costs down there. So those are just kind of a few of the ideas, but for the solution side, I'll probably get into more once we've diagnosed the problem.
Here's some feedback from Rob. Matty does a good job to get his bearings with some initial clarifying questions. Especially in industries or geographies where you're less familiar, it's better to make sure you are aligned with the case before diving into solutions. If you don't understand how a business works, you're not going to be able to help solve its problems. Matty's framework is very straightforward, but it includes a bunch of creative, applicable content within each of his sub-buckets. Matty does well to share that he doesn't just have 4 random categories that he's going to talk about, but they're already prioritized by which he thinks is most likely to be driving the issue. This is a nice way to signal that you're actively trying to solve the case and not just listing 3 to 4 random concepts that might be related to the question. Matty includes a category called operations here, which Rob asked for clarification about. A common mistake for newer casers is to use ambiguous or jargony terminology to try to sound businessy. Watch out, as a lack of precision with your words can make your approach come across as generic.
Awesome. Great. So we've done some initial research into kind of like what, growth at this company has looked like over the last several years. So I'm going to share a exhibit with you. Let me know when you can see it.
Okay. So here we have the C Group's high-level financial summary. So this is their e-commerce revenue in millions of US dollars from 2019 through 2024. And then on the bottom, we've got what their EBITDA is, and they're in millions, and then their EBITDA margin. So, from an outsider perspective, going from 823 million to 13.35 billion in 6 years is tremendous growth. So, they've got to be really pleased with the trajectory they've been on. And I'm sure their VC backers are also really, really pleased with that sort of hockey stick-like growth. But what I see here is that as they're going from a negative 1 billion in EBITDA in 2019, and their revenue has gone from 823 million to 13.35 billion, quite a bit of growth. Their EBITDA has stayed negative only until this year. So this is the first year that they're turning a profit, and that profit is only 1%. So despite almost 15 to 20x growth in that time, we're still only seeing a really slim profit margin. So to me, it seems like the revenue growth aspect isn't necessarily the problem. It's how are we growing sustainably, which I think we've talked about. But I'd want to dig more into kind of a breakdown of our revenue to see if there's a place where, or a cost, excuse me, to see what kind of subsidies are we offering merchants, what kind of subsidies are we offering buyers to join the platform, because it seems like we might be overextending ourselves there.
Got it. And where, like, when you talk about the places that you'd like to dive in, right? Like, what are the types of like places where you think you'd like to look?
Yeah, I think the customer acquisition cost is a really interesting one. As I said, like getting your first customer, you're able to offer a bigger subsidy, but when you're offering that to people who are more reluctant to sign up for the platform in the first place, you're oftentimes going to be spending more money on that hundredth person or that millionth person, whatever number that is, just speaking in round numbers. And then with that, you've also been spending on all of those other people up until that point. Your first customer, if you've done things well, you've probably given them a subsidy and they've stayed on the platform. But that millionth customer, you might have given them a subsidy and they order once and then they cancel their subscription or they don't place another order. So I'm really interested in that because it seems like they're really overextending themselves for profits in the sake of growth.
Yeah, it's interesting. So you mentioned kind of like two types of customers there almost, right? Like,
Yeah.
and so what numbers would you look at to see if, because there's one story you can tell, which is basically like, yeah, CAC is really expensive, but we've acquired all the customers now and everything's great, right? So
Yep.
we're effectively, if we flatline revenue growth, profit is gonna explode. So don't worry about it, right?
Yep.
But there's another story you can tell too, which is like, no, it's not the way that this is gonna go, right? If you stopped that acquisition spend, what would you look at to kind of diagnose? Like, all right, is this a good story or a bad story?
I would want to look at average spend per customer compared to our customer acquisition cost over time.
Okay.
And so if our customer acquisition cost is going up and our average spend per customer is going down, I think that is kind of a warning sign to us that we might be acquiring the wrong customers. Or we need to focus on our existing customers and driving growth from them rather than spending a lot to bring on new customers to the platform.
Okay, awesome.
Here's some feedback from Rob. Maddie did well to clear the chart and call out some key takeaways of the information that we're seeing. Maddie does well to subtly reference the idea of SEA Group having VC backers and following a hockey stick-like growth curve over the time in the chart. It's one thing to look at data and say, this is what I'm seeing. It's another thing to say, this is what I'm seeing, and it maps to X, Y, or Z from your own existing business knowledge. Pulling in that context can help demonstrate that you have the baseline business acumen required for the role. Maddie does well to riff here with Rob on a question that is related to, but not explicitly covered by the data in the chart. When you're casing, it's important to keep a mindset of collaborative problem solving with your interviewer and not fall into the trap of case theater where both parties are reading their respective lines off a script during an interview.
All right, so we're gonna kind of hop sideways now and we're gonna talk about kind of a new possible market entry. So one of the key levers available to increase revenue growth and profitability is new market expansion. I know you had your heart set on Cambodia. Gonna go check out the temples there. It's incredible. Have you ever been?
I have. It's really cool.
Pretty awesome. You gotta go I spent a really, really hot couple of weeks in Cambodia. It's very warm. All right, but we're not interested in Angkor Wat. We are interested in Kabuki theater. And so we are going to Japan, or we're thinking. And the first thing we need to ascertain is the market size in terms of revenue. How would you go about estimating the market size for Japan?
Okay. Very interesting. So we're an e-commerce platform thinking about revenue growth from Japan. Do you mind giving me just a minute to sort of organize my approach? We can talk about some of the key inputs here. Okay, so I'm thinking about this in a top-down approach. So thinking first about what's the population of Japan. We'll take population and we'll go to a number of households. From a number of households, I'd want to think about what is the disposable income on that they can spend. And then from there, we'd want to think about how much are they spending per month. And then kind of what the C group's commission would be, or kind of what are they getting off of this? Because it is a marketplace. So I do actually have, my sister-in-law is Japanese. So I know the population roughly of Japan. So we'll say it's 120 million people. And I know that Japanese families, they've been experiencing really low population growth. So I think there's going to be a higher number of households relative to the population than you would see in other countries. So I'm gonna assume about 55 million households or so. The other ones I don't have as much information on. I can make some assumptions, but do we have any information on what the disposable income would be per household in Japan?
Yeah, so I can help you kind of like fill in the rest of the gaps there, right?
Okay.
Average monthly disposable income per household is about $4,000 per month. Which is pretty good. It's a lot of
Yeah.
cash. Net order value per purchase on our platform today is $50 per order. Purchases per month for customers, we think about 3x, so 3
Okay.
per month. And then our marketplace commission percentage is 10, which is pretty low. Yeah, so those are the rest of the numbers to kind of fill out the math.
Okay. Um, Makes a lot of sense. So what I'm going to do here is I'm going to take the population and I'm going to break it in different segments, because I think the behaviors of who's ordering and how often they're ordering and making these purchases are going to be quite different. And then we'll take that and we'll use the assumptions about online shopping. So 3 orders per month, $150 per order. And we'll say that's, $150 per month. And then we'll say how many what their behavior looks like over the course of the year, and then we'll scale that down by that 10% commission. Sound like the right approach? Great. Okay, so 120 million people. We'll split that evenly between 4 groups. So 0 to 20, 20 to 40-year-olds, 40 to 60-year-olds, and 60 to 80-year-olds. I know Japan has one of the highest populations of octogenarians, but or centenarians, but we're gonna forget them here. Apologies to them.
Yeah, Japan has one of those, what are they called? Gray zones, blue zones?
Blue zones, yeah, exactly. So 0 to 20-year-olds is going to be 30 million people, and uh, the 0 to 15-year-olds, like for the most part, aren't going to be making a lot of online purchases. And so I'm going to say it's going to be about 30% of them overall will be making purchases. The majority of that is going to be coming from the 16 to 20-year-olds. And so 30 times 30% is going to be 9 million shoppers. Then we have the 20 to 40, so that's going to be another 30 million people. And the vast majority of these people, I'm going to say 90% just to be conservative, but I think it's probably going to be, in reality, maybe a little bit higher. But 27 million from that group. 40 to 60-year-olds, I would say that this will be about 70%. I think maybe some of these people closer to the 60 in their 60s or closer to 60 years old, they didn't grow up with online shopping, so they're like, we don't really subscribe to this. And there is still a decent rural population in Japan, so we'll say that'll be about 21 million. And then the 60 to 80-year-olds, again, this is going to be a group that didn't grow up with the internet, is less familiar with it. So 30 million people, I'll assume about 30%. And so that's going to give me another 9 million shoppers. So we have 9 and 9 is 18, 21 plus 27. So we have 66 million online shoppers. And those 66 million people are going to be spending about $150 per month. That's the 3 orders times $50, an average of $50 per order. They must have never had a kid and be placing, panic Amazon orders at 3 a.m. When you realize you're out of diapers or wipes.
Why can't you
Um,
pick diapers in 36 minutes? I don't.
yeah. So 66 million times $150 per month times 12 months of the year. So that is going to give us a $120 billion online shopping market in Japan. Pretty substantial. Not a surprise, fairly wealthy and fairly big country.
For
Say that one more time.
The time frame for that 120 billion?
That's in 1 year.
1 year. Okay. Yep. Big. It's not
Uh,
that
Say that again.
big, but it's not enormous, I guess. Yeah.
Yeah.
All right, keep going.
So 120 billion. And so if we said that they're gonna, earn 10% of sales on the marketplace, that's $12 billion. So, you know, that's basically I'm saying like if they were the entire online sales market, they would be earning a $12 billion commission on that market, which is out of the question. Like they're not going to be a monopoly here. But I do think, given that their success in other markets in Asia, I think probably assuming a 10% penetration rate would be like a decent assumption. I'd want to test this with kind of what our growth was like in other countries and how successful we are, especially, maybe not countries one, two, and three, but what our entry into the latest markets, maybe our last three, and how long it took us to get to a 10% share, if we did get to a 10% share. But if we did get that 10% share, that's $1.2 billion. And that's a 10% increase on what we're currently doing, a roughly 10% increase on the 13 billion we're currently doing.
Here's a bunch of feedback from Rob. Matty does well to set up and execute this market sizing. He brings in external reference points where he has them and calculates well throughout. Matty initially calls out that the population of Japan likely skews older and explains that he wants to use the number of households in his calculation. However, when he actually goes and executes his market sizing, he chooses to calculate based on individual rather than household, and then chops his age brackets into even buckets rather than making the older brackets bigger. Either assumption or process is fine to use for this market sizing, but these sort of mid-calculation changes should be explicitly acknowledged so it's clear you're doing it on purpose, for example, to simplify the calculation, and not that you're forgetting an assumption or a plan that you had already made. Matty does well to put the number for market sizing into context. The previous chart showed growth over the past few years for that client, and so we can immediately compare the $1.2 billion market size compared to recent growth to put things in perspective. That said, the actual size of SEA Group's potential market is only $1.2 billion in revenue, and Rob acknowledges that this market is smaller than you might have thought. It's big, but not enormous. This number, as Matty calls out, is a 10% increase on their current revenue of where they currently are, but they've had a growth of 30 to 60% per year as per the chart in the previous exhibit. So this expansion might be a good idea, but will only get them a small bit of the growth they've been having over the past couple of years when looking into the future. Matty does well to end with the suggestion of where to go next to complete the evaluation for Japan as a market.
So you mentioned kind of like looking at historic trajectory as far as whether or not 10% is reasonable and in what time frame. What are the other things that you'd want to look at to like see whether or not, that number we plucked from thin air makes any sense?
We need to see who is dominating the market right now. If it's Alibaba, if it's Amazon, is it TikTok Shop? There's some pretty big and well-known companies with some pretty deep pockets that are in e-commerce, obviously. And so if it's a really fragmented market, maybe we can buy a player or roll a couple up, or we can just enter ourselves. But if it's an even 50-50 share between Alibaba and Amazon, that seems like a challenging fight for us.
Sure. Great. Any other kind of factors when thinking about entering, Japan specifically?
Yeah. Do you mind giving me just a second to kind of organize what I want to look into? Okay. So thinking about this, there's really four areas that I'd want to look into. Strategy, regulatory. I'd want to look at the market conditions in Japan, and then finally do some financial viability analysis on this. So in terms of strategy, how does this fit with our other markets? Do we feel like we'd be able to both get customers and get sellers for Japan? What kind of synergies exist between entering Japan versus our current market? I know we think about, Southeast Asia, but like that is a massive, massive market that we're already playing in with very different countries, very different cultures. And now we're moving to Japan. That's not close. I've made the mistake of thinking, oh, I'm in, X country. Why don't I just pop over here? That's a 6-hour flight. And then I'd want to look at how are we differentiating ourselves from those who are currently in Japan. So we definitely need to look into that. Regulatory, what kind of laws exist in Japan for a foreign country entering the e-commerce and sort of logistics market. In terms of market opportunity, I want to look at what the market currently exists. We know that it's about $120 billion. Is that growing at a 1% CAGR, a 10% CAGR, a 20% CAGR? That'll really influence our desire to enter Japan or not to. And then we talked a lot about the competitive landscape. We need to know more here. And then in terms of financials, we talked about a 10% revenue growth. That's great, but is this going to be a 10% revenue growth at a 20% cost increase, or is this going to be a 10% revenue growth at a 3% cost increase? And we're actually going to be driving some more profitability here. And so want to do some assessments there.
Here's some feedback from Rob. Maddie does well to deliver a well-organized brainstorm here, even though the question is phrased more casually as a follow-up to the previous market sizing. It's not uncommon to see candidates lose their ability to think and communicate in a structured way when the questions sound more casual or conversational.
All right. So, let's do the CEO walks in thing. He demands to know what his recommendation is. He's kind of a bossy guy. I don't.
Okay.
But given all that we've discussed, what would your recommendation be?
Okay. Yeah. Do you mind giving me just a second to organize my thoughts here? Okay. So first, I recommend that we be more cost conscious in terms of where we are investing, particularly around customer acquisition and whether we are acquiring customers that are increasing spend with us or are decreasing spend with us. I think that this can be a big issue if we're consistently investing to acquire customers who are not going to, quote unquote, love us back and spend money on the platform. So need to look at that. And then in terms of a solution here, I want to look at entering the Japanese market. It's got an attractive market size, and we need to do a little bit more due diligence, but I think that we could capture up to 10% of the market here, which would give us, or 10% of the market at least, which would give us, a 10% revenue increase here. And so if we can do a better job of investing with customers that are going to stay with us long term and increase our spend, I think we'll have more consistent and sustainable profitability. And if we're able to successfully enter Japan with this better investment strategy, I see us on a more sustainable long-term growth plan.
Awesome. Great stuff.
Hey everyone, it's Kenton Kavesti here, the founder of Rocketblocks. Thank you so much for watching this mock interview video. I hope you found it informative and helpful as you are getting ready to prepare for your own interviews and hopefully landing that job offer you are excited about. We have a ton of great content on the Rocketblocks channel coming out on a weekly basis, mock interviews, mini lessons, and chats with our Rocketblocks experts. So if you haven't subscribed yet already, please do so. There is a big red button below. And if you hit that, you'll get all of our content as soon as it comes out. Thanks for watching and have a great day.